Welcome to Regulatory Ramblings, Episode 4. Our guest today is Ursula McCormick of the law firm of King & Wood Mallesons, where she's a partner. Having been a practitioner for close to 2 decades, she's one of the region's most sought-after regulatory specialists. In addition to being a certified anti-money laundering specialist, Ursula is also a global digital economy lawyer who advises on cross-border and transactional matters. And with that, Ursula, thank you for joining us. Certainly there is, post-2008 and pre-2008, there was, as a regulatory journalist, there was far more to cover afterwards, and there weren't enough people, and there was too much going on, and you really had to be strategic about what you did end up covering. Certainly across the common law world, applications to law schools, women have a healthy representation at most law schools, I would say, across the common law world, certainly the most. In the US, where I'm most familiar with the upper echelon law schools. Progress has been made, but rightly or wrongly, this has been seen as a conservative profession, heavily male-dominated. Do you see that as still being the case? And what progress have you seen in your own firm, in your own immediate circle of contacts?
Yeah, well, I start by saying that I have a majority female team that's absolutely knocking out the lights. So I'm very proud to say that. But look, it's been such a long arc, for women in the law. We had the first female lawyers, back in the 1800s, but, in Hong Kong, it was 1932 that we had the first, admission. And, we have seen a lot of progress. And what we look at is not only sort of who's making it to the top echelons of the legal profession, but, we looked at who was accessing law schools, as you mentioned, who was coming out of those law schools looking for a role in different parts of the legal profession, including commercial law. And all of that is sort of progressing, quite a long way. I was the recruitment partner at our firm for many years, and what we started to see was that we were starting to get a very strong majority of women who were finishing law school, and a very strong majority of people, being women, seeking to apply to law firms like ours, to the tune of, at one point, it was 2/3. And it was an interesting challenge, because there would be, on occasion, when we were going through the application process, going through the interviews, we would sit around a table and see that we might have only had one male who had, up until that point, made it through, the first cut. And it really made us sort of re-examine, both at the recruitment side, and then I'll talk about sort of next bits in a moment, but what was happening there. And we had to take a different lens. We had to look at who we were sending to law schools to talk about our firm and the practice of commercial law. All of a sudden, it seemed like we had men who were not necessarily progressing through to commercial law firms, but perhaps going into investment banks or seeking other avenues. And so we had to turn that a little bit on its head as well, to think about where we had gone wrong, and also to look at how structurally, and systematically we look at questions of potential bias in our models. Now, that's had a really positive impact generally. Bias is, so inherent before we recruit, before we're doing performance reviews, we're looking at bias in really critical ways and sophisticated ways. But the second thing is that, it's all well and good to get people in the door in a good balanced mix, but we certainly have some really stubborn points during a career life cycle as well. We have, a really strong female representation that is growing all the time in the more and more senior echelons. So, from graduates to associates to senior associates, counsel, and so on. But it's no question that, we're still, as a legal profession, not doing very well in terms of getting that balance right at the partnership level. And so it is the case that, we have some fundamental issues. We need to peel back the layers behind some of it. Some of it is, around how we practice law itself. Is it something in commercial law firms that needs to change? And certainly, with demanding clients, we've got very entrenched views, from some of the dinosaurs in commercial law, and so on. But we are starting to see some change, and I think COVID, one of the silver linings has certainly been to see that flexible working, remote working can be a good thing. But also, secondly, we're starting to see a much better focus on what men do in terms of how much leave they take, whether they're a primary carer. We've got great role modelling, which allows women to progress as well. And so I really like that focus on not just telling women, you can work part-time, you can take all this time off. That doesn't serve every woman very well at all. It serves some and not others. And it doesn't serve some men. We've seen men leave commercial law. So I think that whole progress, on looking at how we help people achieve peak performance in their careers, is helping shift the needle for women. And on top of that, we've got some amazing people, Christine Lagarde, Kamala Harris, who've been in commercial law, who are also achieving those, extra level of, echelons of professional achievement as well.
Yeah, I know that, again, certainly in the States, the law schools were getting, in terms of the progression of men in the profession, anecdotally, we've been hearing for a while now that the law schools were getting far more qualified female candidates for every position that was open relative to the applications from men, that they, in order to have more or less parity, a 50-50 balance, the reasoning being society isn't served with white-collar women and blue-collar men, that they're having to almost do some degree of affirmative action or preferential treatment for the guys to have that 50-50 balance. I mean, in my own circle, I've seen a lot of guys, they may study law, they may practice for a while, but I remember, I graduated close to 2 decades ago, that the figures from the American Bar Association at the time were within 5 years after graduation, half of them aren't practicing, and that's more on the male side. And from my own circle, I'd say, that those figures are still borne out because they use law as a springboard into other things, to work for a hedge fund or a venture capital fund or go into investment banking, and whereas the women seem to stick with it, that they gain experience, they progress in their careers, and then they become authorities in the field. So.
Well, it's certainly a multifaceted issue. I agree, and we might say, well, that we need to look at why women aren't moving into some of those sort of frontline roles as well. But, I think one of the good things is that as we've been focusing on women, we're starting to look at cultural diversity. We're looking more closely at neurodiversity. So just having people who think differently within the organization. So you don't just have an organization full of, A-type personalities of a certain kind. You've also got different thinkers, and that just makes the organization and the team so much stronger and so much more interesting to work with.
Very much so. It seems to me that there is still there's a decent balance though in the field of compliance. There seems to be parity there, which brings us to my next question, which is in terms of the world of regulatory compliance, both for financial firms and MNCs. What do you see as the greatest risks, the greatest concerns they have now and for the rest of the decade? Obviously dealing with COVID is one of them, having contingency plans, business continuity planning and the like, but those are the buzzwords we heard after 9/11 for a while, and now that they came back during COVID. What are your clients telling you?
Yeah, look, we've got a lot, and I should say that, the clients I have are very, I've got a very broad sort of spectrum. So it's everything from developers right through to some of the global banks and frankly governments in the region. And so everybody brings to the table a slightly different perspective on it. But, there's certainly some general trends in terms of
current themes.
Yeah. So let me start sort of at the sort of fundamental level, and then I'll move into the sort of the specifics on substantive issues. At a fundamental level, I think that we're at a point where some of the traditional paradigms of how we comply, how we regulate, are being challenged. We see reports around whether or not AML controls really are effective. Have they done anything to stem that? Do we care anymore if a global bank, or does the global bank itself care anymore if it receives a record $1 billion fine? And so, there's a few fundamental things that I think are under immense, pressure and scrutiny in terms of the go forward. And the starting point is, why on earth do we regulate? And it's such a simple thing to say, but, why we regulate must always come down to something in terms of why add that additional level of control. Because as we know in the compliance world, you add a regulation, you're adding cost, you're adding complexity, you're adding resources, you're adding, time spent away from building things and doing things. And I feel like this is something that is often overlooked when we're in a world of more is more, regulation. And the key things that must come down to consumer protection, market integrity, preventing crime, and then systemic risk. And those are the sort of principles that come out of the IOSCO principles around, regulation. But also, if you look at any of the trends at the transnational level, that systemic risk piece is really important. But the why we regulate. The second one is how to regulate, and when we work on regulatory consultations, as we have for many, many years, the industry really wants and regulators support a risk-based approach. It's such a, commonly bandied around, term. But what that really means is that we're looking at activities, we're looking at the tools that can assuage risk, we're looking at, what residual risk remains, but we always have a residual risk. And then we iterate over time. But I think getting comfortable with that residual risk is probably the hardest. And balancing the residual risks against the upsides is where has been a really challenging point to navigate, particularly when we talk about things like, respecting privacy, when we want to be more transparent, or if we want to protect consumers, but also give them access to growth opportunities and therefore risk. And the second bit around regulation and how we regulate is around making sure that we move in an area where we've got so many things that are changing, that we go from principles and then we get more specific over time, but we don't misuse those principles as a hammer to look at something with perfect 2020 vision, when a reasonable assessment was made at the time as to what that meant in practice. Because I think that's the greatest barrier to innovation and experimentation, is the fear that some of those principles will be used against institutions, but they do serve a critical role. And then finally, sort of how sort of keep up with regulation and how we operationalize it and enforce it. And what I hear generally from large institutions right through to small institutions is that you want to get to a point of sufficient certainty around what a law or a regulation or code means, but you want enough flex to move forward. But it always has to come back to the people who are going to be at the coalface having to operationalize something, and to tell them they're going to have to just sit back and look at everything in the fullness of time with a glass of wine and carefully think about something, ignores the reality of what compliance professionals realistically need to handle with. We need things that we can operationalize, and we need at the same time the time and space to look beyond. But in terms of the sort of, the specific areas that, are of interest, we certainly see, an interest in safe experimentation. And so a lot of banks are doing proofs of concept. They're innovating, whether it's with, central bank digital currencies, stable coins, digital securities, maybe a little bit of crypto. So, that's one area. And like putting enough around that so that they feel that it's safe from the perspective of not being hit with that hammer in 6, 12, 18 months' time. The next is really around, AML continues to be a very big challenge. And I think particularly as we become more and more digital, more and more remote, being able to deal with AML and related risks in that environment poses new challenges, but also the integration of technology. So we see a lot of people who are looking at the tools that are available and that are at their disposal, but also have really long lead times for the implementation of that technology within their institutions. And they also have the challenge of operating, in many cases, on a global basis with a particularly strong home market, with strong home sort of directives. So being able to integrate technology within that mix can be, particularly challenging. Besides that, we also see a lot of, with COVID, we've got people moving around the world. So, we've got, traders who are sitting in Thailand, or, some head of sales that wants to be working remotely in Sydney or through Japan. And so it's putting a lot of strain around traditional cross-border models, as well as where customers are now moving around a lot. And so being able to stitch together solutions for them that still represents, respects, the licenses that they hold. There's many more things I could go on about, but there's some of the things that are top of mind.
I mean, well, in terms of what you were saying, a recurring thing seemed to be the role of technology. And are lawyers technophobic? I mean, do they? Certainly in legal academia, one gets the impression that, it could be 1922, it could be 2022. In fact, many legal academics would probably be happier if it was 1922, because they could get by with a little bit of jargon in yesterday's forms, and their employment and their positions in society would be concrete, it'd be secure. Whereas, it does seem as though as time goes by, to add value as a lawyer, you need to know about finance. You need to be maybe not overly quantitative, but you need to be comfortable with numbers. You need to be able to read financial documents. And now, you need to understand the underpinnings of technology.
Yeah, there's a few ways that becomes relevant. There's the practice of law. So, I, like everybody else, bitterly moan every time we've got a new system for our documents and precedents and time recording and everything under the sun, or, integrating DocuSign and so on. It is like, the practice of law is becoming more and more technological. We're looking at ways in which capturing our own knowledge, reusing it in the, for the benefit of our clients, all of that, is and lawyers are dragged, like myself, are dragged kicking and screaming to continue to adopt better and better technology. And so we're experimenting a lot. We've got clients who expect us to experiment, whether it's AI tools for M&A transactions, or it's, the e-discovery tools for litigation. So, that the practice of law is becoming more and more digital, and, you'll have the odd, more senior partners. I won't count myself just yet in the dinosaur brigade, but, where they will simply rely on their junior resources to sort out the technological aspects of it, and they'll get on with their advisory piece. But the second piece is just our clients moving more and more into the digital realm. So we did a grand slam in the metaverse just recently, and being able to speak with clients about technology means that you do need to spend some time learning about it, experimenting with it, and most importantly, not being afraid to ask stupid questions. There are never any stupid questions, but just really to unbundle factually what is happening, where the data flows are, where the financial flows are. And, what's interesting about that is that, I think lawyers have a special skill set with unbundling those complex facts. And sometimes we find our clients need to go away and talk to their engineers because they don't know what's going on. But certainly technology has brought a really different dimension to the practice of law.
So, there are times where what seemed to be true 2 decades ago when I was a student it still seems to hold good now. That if you look at to the extent technology has impacted the practice of law, okay, word processing, spreadsheets, databases, online legal research, and software to keep track of your billable hours. Some might say that those five points are already a big deal. But it doesn't seem as though technology has really impacted the practice of law. Again, there seems to be a tendency to, again, want to get by with yesterday's jargon, yesterday's forms, yesterday's way of doing things. And, I mean, in that regard, I guess the profession is slow to change. You talked about the utility of compliance at the start of your statement a little while back. That I don't think that there's that much of a value for compliance. In fact, the statements I hear from many bankers off the record is they have to have it. The state mandates it, but the attitude is, who are these people making not insubstantial sums in some cases for what is essentially an oversight role? Even though compliance is a cost center, as with the tax unit in a bank, you can quantify the value of tax based on how much money they save you. That doesn't seem to be the case with compliance. It's the what if we're here to prevent things from mushrooming into a multi-million or billion-dollar fine. But again, that too is too speculative for many bankers.
Well, it's such a great provocative statement. Wow. So look, I have seen compliance numbers and resources used merely as window dressing. We saw it post-implementation in Hong Kong of the AMLO, where banks were just throwing numbers on a PowerPoint deck with the assistance of their wonderful consultants, just to say we'd hired X hundred of compliance people, FCC professionals. Who knows where they had sourced them? Because at that time, people who were moving were commanding upgrades of 25% or so in terms of salaries, and it was just such a hot time for adding compliance. And are those figures necessarily helpful? Are they doing meaningful things within the organisation? Not necessarily. Having said that, compliance is just fundamentally part of the three lines of defence within, organisations, and whether they're regulated or unregulated, I'm a firm believer that three lines of defence is a decent structure to consider. And so, if we have frontline as first, we've got assurance as third, in the middle as people who assist, in making sure that it gets done. And so much of what drives an effective compliance regime is, the tone from the top and the people that you put into those roles. And I think that where things go astray is where they are simply people who check boxes, and there is definitely a role for people who are doing the operational aspects of tasks, but certainly often missing the opportunity for using compliance to provide that feedback loop of the emerging risks that business might not see, that the board of directors might not see. And that engagement in business and understanding what business wants to do, is that, additional layer that makes the difference between a purely sort of functional, must-have compliance compared with a really useful and value-adding compliance division within an organisation. Okay.
Your point about the risk-based approach segues nicely into my next question about money laundering. And look, a lot of institutions, certainly in this town, have made it, well, certainly for a number of years, and still to this case, even though the HKMA told them to knock it off, they made it inordinately difficult to open bank accounts. They've debanked entire categories of clients, and that's not in accord with what the IMF or the World Bank have been saying, because the great unbanked may resort to unsavory lenders or unsavory mechanisms if you cut them out of the official banking system. So, as AML and KYC and CTF compliance has been ratcheted up in conventional banking, the claim is that trade-based money laundering has been spiking now. In Hong Kong, we're familiar with it because we know full well in the 80s and 90s, you had exporters sending counterfeit video games to the U.S. in violation of IP and customs laws, people understating the value of the goods being sent to minimize the tariffs under the old TRIPS framework. But now more focus is being given to trade-based money laundering. Is it still a concern, or is that overstating the case? Have they grown wise? Have they grown savvy to our institutions on top of the TBML risk?
So this is a really interesting topic. TBML is one of those areas that was on the FATF radar quite some time ago and started to sort of hit the local regulatory radar, soon after that, from the perspective of starting to see the role that banks play and perhaps, requiring a little bit more. We were involved in an audit back in 2015, a particular bank, and then assisting HCAB with drafting the TBML paper that was ultimately issued and still in place. Yeah. And, what was so interesting about both of those projects was how fiendishly complex trade is. You've got situations where you've got really complex relationships. So you might have a buy-side bank that pays a sell-side bank's customer. You might have receivables and other rights that are unsold, and then the purchaser presenting back to one of the original banks. You've got online and offline worlds, digital and analog still to grapple with, stubborn sort of paper-based processes still, with various sort of customs regimes, and then a lot of different facts and jurisdictional touch points. So you've got customers, you've got counterparties, you've got transshipment routes, origins, destinations, ship flags, source of the actual resources that might be, traveling along. And all of that means that you've got a lot of facts, a lot of information, but none of it alone might be enough to give you a perspective on whether or not something is risky at all. And probably the best example of that as well is dual-use goods. So dual-use goods, for those who aren't familiar, are goods that can have both a completely legitimate purpose, like being used for fertilizer, and they can have a nefarious purpose, like being used for bombs. And there's lists of these dual-use goods, but if someone's, transporting phosphates, you don't automatically think that, and offboard them. You need to look at the complex fact pattern behind it, and that's time-consuming, it's costly, and so on. And so what's happened, though, that, and trade is a huge problem still. It's sort of hundreds of billions, if not trillions of dollars still estimated to be washed through trade-based money laundering. You've got new risks related to sort of COVID, as well as instability rising from the sort of Russia, Ukraine, and other crises. But you have a really different environment now in terms of the tools that are available to crunch that sort of information, to be able to put together patterns, to be able to put together facts that don't on their face look problematic, but when judged against historic patterns or what's known about a particular customer, will spit out something that is anomalous to be able to generate something meaningful. And so I feel like at this point, 2016, papers like Hong Kong, others like Singapore and others, also published theirs. But we had a period of time where it was still very hard to implement, necessarily directly. But now I think the needle is starting to shift where those tools are becoming more useful to be able to, meaningfully implement some of that. The other kind of key things that are changing are sort of digitalization of the overall processes as well as information at government levels around the world. You also have greater levels of beneficial owner transparency, not just through CDD, but also through the requirements at the corporate level. And you've got the information sharing mechanisms like Finland and Hong Kong that enable the creation of typologies that banks can then take back to their systems, to their data sets, and then be able to do that. But we're still in this juncture where that will help. But until we have a lot of that fully digitalized, and we have IoT involved as well, it's still going to be a stubborn problem. And you've got really strong incentives to use that to obviate sanctions, work around non-proliferation rules, terrorist financing and money laundering. So still going to be a complex issue, but it is starting to benefit from some of the new tools that are coming online.
Yeah, no, it's great that you mentioned sanctions and non-proliferation because it's not just a money laundering problem. I mean, as people have pointed out, you've got to look at shipping manifests. Do vessels actually reach where they
Yeah.
claim they're going? What about bonded warehouses? You know, things like that. It's overdetermined. It has more than one cause. It has more than one facet to it. Um, Next on cryptocurrencies, I mean, different people have told me different things that they had different moments of epiphany on this topic, different points where they woke up and realized that this was something they had to pay attention to. It wasn't just a passing fad, uh, both in terms of the interest in it as a commodity, as a speculative investment, but also the underlying technology. What was your light bulb moment? What was your moment of awakening, if I can call it that, regarding this topic that made you say, as a professional, I need to bone up on this subject because this is a matter that's growing and it's going to become more pervasive?
Yeah, look, great. What a great question. So, 2016 was the first time we had someone approach us, and it was a blockchain-based share, and it was a US platform that was interested in looking at regulatory treatment. Quite disappointed that a digital share was likely to be a share and a security under Hong Kong's regulatory regime. I'm sure that they had similar advice in the US. But it wasn't really sort of going anywhere for a little while. And we were monitoring it from the perspective of financial crime. So we were, writing alerts about, what FATF was writing about, what the regulators were saying. 2014, we had the Customs and Excise Department say that it's not in the MSO realm. So we were looking at it from a financial crime standpoint. And it wasn't until 2017, it was only a year later, where we were approached to do an ICO, and we'd heard a little bit about what these were. And I still remember sitting in that meeting, and it was just so fascinating from a legal and a regulatory standpoint. It wasn't something that we had looked at carefully before. It was a utility token. It was Hong Kong's first ICO, and it related to a decentralized exchange. And was sitting there, and I think the curiosity got the better of me, and I think from a regulatory standpoint, it was just so fascinating to unpick, and I didn't have a need to consider it from any sort of moralistic perspective. People came to see me for advice on how this fit within the existing law. And so the approach that some firms took around that time, which was to say, we're not touching this horrible, dangerous space, we just didn't have that issue. So we worked on that, but it was just like opening the most remarkable world. We're reading white papers. We did sort of 40, 50 odd ICOs. We've analyzed 250 plus assets in DeFi protocols now. And you just can't help but find this space so legally interesting, as well as just interesting from the perspective of how the cogs turn, how the technology is designed, and particularly coming from a traditional finance perspective, also how some of traditional finance is weaving back in, drawing from, being innovated itself. That's how we've just become so enmeshed in it.
Yeah, I mean, some people have said to me that when AMLO, our local anti-money laundering ordinance, was amended in 2012, and it consolidated the different pieces of money laundering legislation across the territory, from the narcotics ordinance and the organized crime ordinance, that when they saw that the drafters factored in digital currencies, they knew something was up, because it was mentioned in AMLO. The HKMA's position has been these are digital commodities and people trade them at their own peril. But if we take a step back, I mean, Dubai's got the first crypto-specific regulator. More fintechs and crypto outfits seem to be mushrooming up in Singapore. Hong Kong seems to be behind. Beyond just the business prospects in Hong Kong, is the regulatory system in Hong Kong and Singapore up to the task? I mean, in Singapore, the issue with the free market libertarian types is it's too state-led, but that's Singapore. Hong Kong, they've left it to the market, and, well, not much of anything seems to have happened. Whereas in Dubai, they've, I mean, in a sense, it is a police state, but they're being accommodating to certain sectors. They're being accommodating to certain industries. What are your thoughts about what's the state of play, and whose regulatory apparatus is most fit for purpose in this new environment?
So, this has been a really favourable story for Hong Kong. 2014, the CNED's statement that it didn't want to see applications from people doing crypto platforms, didn't see itself as the regulator, was a really defining moment in setting the scene for where regulation was heading. And it meant that we didn't have the same sort of regime that you see in the US, where you've got money transmission as being the potential avenue for many exchanges to be regulated from sort of day one. And so that meant that and then we had these statements, as you mentioned, from HKMA and SFC over time, that really said that we didn't have a regime for that space, but had a number of warnings that were out there, and really, as you say, left it to the market. What that meant was that we had sort of two things. One was quite a lot of flexibility in terms of what could be done in Hong Kong, which obviously attracted a lot of people from around the world. But you also had certainty. And one way or the other, the biggest killer of innovation is uncertainty. So whether it's the platforms that flee the US and Canada or block them off entirely because they just can't work out whether or not something might be at risk of being a security because of elastic definitions there, or whether they have the problem of being in an overly or in a very restrictive market like mainland China. So that certainty is incredibly important, and that was a great thing that occurred. Of course, you've got things that fall through the cracks. So Hong Kong has always been, as we know through AMLO, has sought to make sure that it was in step with the Financial Action Task Force, with FATF along the way. And what we've seen is that there have been quite a few steps to bring Hong Kong along on the journey, and we've got the bill now that will include virtual asset exchanges in the mix, but you don't see a very large regime kicking in terms of scope of who is caught. There'll be a lot of things that are still out. Having said that, Hong Kong is taking a bit of a different approach to most other markets in looking beyond just AML. I think that the history of Lehman, the history of the financial crisis, looms large for regulators like the SFC, and the SFC taking on the position as the primary regulator here means that we have a regime that will focus on consumer protection, market integrity, on systemic risk, not just on preventing financial crime, which is a really positive thing. It's very important. We might say that it's going too far in terms of the proposals by the FSTB and the Bills Committee or the Legislative Council to shut out retail. But we do have a regulator that's focused on those other things. And that's been a real gap of some of the offshore regimes that merely focus on AML. Singapore is interesting. So we've got, the Payment Services Act alongside, the capital markets regime. You've got the benefit of a single regulator, the MAS. You've got some interesting approaches to protecting consumers by banning public advertisements of crypto. And you also have some interesting things in the pipeline. So sitting in the legislation, passed but not active, are amendments that will cover peer-to-peer trading. So I think there's different experiences within these markets, and you might well say Hong Kong's been a little bit slow. But I think in adopting the clarity up front, even the SFC's regime, the sort of opt-in regime, as it was called, for people who did exchanges that wanted to include security tokens. And now this means that we have got a bit more of a sophisticated regulator in the crypto arena, and we're going to have a model that is ahead of its time in terms of questions of suitability on consumer protection.
Hong Kong certainly seems to be taking its time, and that's not to say it shouldn't. I mean, it should devise the solution, the regulatory framework that's right for it. But if we were to just shift gears and look north of the border, no matter what the Chinese government does to clamp down, the demand for crypto hasn't subsided. If anything, I mean, it is a black market of sorts, but that hasn't deterred people.
Well, I think, I've certainly seen a deterrence of international players, and I have no doubt, we certainly encounter them from time to time, the sort of black market operators, those who work on a reverse inquiry basis. But, since the September 2017 announcement, you had the joint announcement last year, focus on mining operations as well. That environment has changed significantly. And we see a lot of the exchanges that had an international presence sort of really, just changing their view and approach on the sort of grey areas. So I think you'll always have the people who operate in the shadows, but certainly not so much in there. But I think we've got really different policy drivers. So we might say over time that will be different, perhaps in a market like Hong Kong, but you do have a different policy environment. You've got a central bank digital currency that's effectively live, in various pilot phases, and you also have capital controls, which Hong Kong does not. Hong Kong also is and has written into its basic law, there needs to be an international financial sector, and that carries with it certain connotations around, wealth products, wealth, and investment into structures. So I think that will continue to mean that there is a different policy environment for crypto, and I think, as you mentioned a bit earlier, it's not going away anytime soon.